Alright guys, welcome to another live stream. This video here, I thought we could just rip through some top-down analysis again. Pretty well every day after a new day opens in the crypto market, I usually do a top-down analysis, so I thought I would just get in the habit of starting to make these live streams while I do it. So let's start with order blocks here. If you watched my stream a couple days ago, here, one sec, sorry. If you watched my video a couple days ago, we did our top-down analysis as well. So let's do another quick little session. This video won't be too long today. Okay, so let's see. We got nothing new on the 3-week. Nothing new on the 2-week. Nothing new on the weekly. Okay. Check the daily. So on the daily, I like to go from the 6-day all the way to the daily. No new 6-day. There's a 5-day there, but it also matches up with the 2-day. So I don't need to mark that that's a 5-day as well. Okay, here's a new one. Here's a 4-day order block. This 3-day, you created a 3-day originally, but then the following candle came back to tap into it. So we don't mark these ones. Those ones have been tapped into. There is another 2-day here, so we're going to put that in. Okay, daily. Here's another daily order block. Okay, that's it for order blocks. Now let's do the big ranges. So I mark out all Bitcoin's massive ranges. So you can see we're on the 3-day chart here. So let's hide these ones. And keep them like this here. So there's no new like big range to mark out, and there won't be another big range to mark out for a while, right? It needs long time to give you a macro range. This one was 108 days. This one here was 63 days, 57 days, and 230 days. So nothing really will change here for a while. And then I mark out all the major POCs that match up with these. So let's drop a little. So this is pretty important because this is the major POC of the previous range. So here's the previous range, and this is the high volume node right here at 107,483. And that's kind of all I've been talking about in my trading group. If you're interested, just comment below or send me a DM, wherever. Contact me throughout any of my links there. But really, this is all that kind of matters to me, is if we fall below this, I'm targeting way down here. If we can hold this, I'm targeting up here to the major POC. Now you can see that the major POC is actually showing it down here. That's because on this indicator I have it that it keeps extending right for every candle that's open. So the volume profile, high volume node, can actually change, and you can see that's what actually happened here. And I'm just seeing this for the first time as well. So on the volume profile, you see how up here the volume is sticking out much further than it is here. That's a high volume node as well. But what's just been happening while we've been sitting at this zone, look at how much volume was created. We have now this massive high volume node. So we're actually going to mark that out now. which these are, yeah, like these are very important. Honestly, high volume nodes of macro ranges, I don't think you even need anything else as a trader if you're trying to do like macro positions or buying Bitcoin spot or selling Bitcoin spot. I think really this is all you need. You need your high volume nodes. When you regain a level, you target the level above. When you lose a level, you target the level below. Okay, so those are done there. Now I do the exact same thing, just small ranges. So we'll drop down to the 4 hour. And you can see the last high volume node is where we found resistance. We were unable to close full body candle closes above the high volume node. So we've seen a rejection, and so far we haven't came back to be able to take this high volume node out yet. So I would say the key thing on these small ranges right now is getting above 112,800. That's the high volume node of the previous range, and it doesn't, just because you tap into the high volume node doesn't mean the volume disappears from what was there at that high volume node. So we definitely still pay attention to a reaction. A reclaim of that level is very bullish. A rejection there could just mean a macro lower high coming in, or a rejection here, right? We're at the value area high. So at value area highs, you look for shorts. At value area lows, you look for longs. The one thing at value area high is with market structure. So if we start going in an uptrend, you're going to keep creating these sideways ranges, and you're just going to keep breaking that value area high. And that's why we need all of our top-down analysis tools that we use so we can take the guessing out of it. So nothing has changed on small ranges. Let's do supply and demand now. So this is supply and demand on the daily and above. So we'll check the weekly out. Nothing new. The 3-day, nothing new. Nothing new. Okay, here's a new piece of demand that was created on the daily. Right here. When you bounce from demand, you go target supply. When you reject from supply, you come down back to target demand. Demand and supply aren't buy zones or sell zones. They're zones to watch for your signal. So if you're coming into supply, I'm definitely watching for my bearish signal for confirmation that this zone won't be mitigated. Because if you've watched some of my streams before, what it is anytime you take out supply, you're grabbing that supply and you're turning it into demand. So an example is if we came down here and fully mitigated this demand, we're allowed to mitigate it and then continue. But if something like this happens, that you fully mitigate it and then you notice that you kind of just hang around this level, that usually means that this piece of demand is now starting to flip in supply, and then this will all be one piece of range supply. Sorry, I drew that bad. It would all be one piece of supply. Okay, nothing new on that. Now I do the daily and lower for supply and demand as well. So let's check the 12-hour, nothing. The 10-hour has this one right where the 6-hour demand is, so we're just going to leave the 6-hour and not mark in the 10-hour. Okay, let's see if we can just find I want to try to find a small piece of demand in here that hasn't been tapped, but a lot of these have already been tapped into. Let's check this. So I'm going to leave this one on the chart here, but this has already been tapped into. But we're just going to mark it out, just letting, because this wasn't even half mitigated. So when it's not even half mitigated, I usually leave it on the chart. So we're going to mark that out, and we're just going to leave it there right now. We'll see if there's like a 30-minute. It'd be nice if we could find an imbalance of some sort in here, because if you don't hold the imbalance here, that is a very strong chance that then that's a lower high. If you come down and hold the imbalance, there's a really good chance that you come take this high out then. And I don't usually like dropping this low of time frame, and no, we can't drop any lower here. So we're going to leave it like that. I'll do a zoom out in case you want to mark down some of these. Okay, now Fibonacci. I'm going to hide all this. Oh. Sorry. Holy. Do this, do this. Fibonacci is very important, so I just want to go through each of them. Holy, okay. Sorry, I was trying to make this so I could do one by one, but okay, right here. So this is the first Fibonacci pull that I've made from the bear market low to all-time highs. So even just a moderate pullback is to the 382. So if you were to just take the Fibonacci from here, a very easy like a very easy target to me is that 382. Once things start actually getting ugly, if they do, then I would be targeting the 382. Now if we take this high out again and we do this, then this moves, right? Of course we have to pull this. And then it would move your Fibonacci 382 probably up to, I don't know, maybe about 85,000. I'm struggling here, guys, holy. Okay, cool. Now I did the next one. So from this low to here, I didn't mark the 382 on this one because we pulled another one from here, but the golden pocket is right around 79,000. Then I did this one. Your golden pocket is right around 94.2. Then we did local. So if we zoom in locally here, from all-time highs to the current local lows that we put in, all-time highs to current local lows, I grabbed the fib pull from here, and here's the golden pocket 786. Meaning if you're going to go form a macro lower high and we don't do it, say, at the 382 level, then this would be my target zone. Now if we pull the 382 open here, let's see. See how we're just finding resistance right at the 382? Regardless, if we shoot up here, just look at how many days the 382 has stopped us. For 8 days already, so they're pretty powerful. Then we got this one. From this local low to this local high, we've come down to bounce at the golden pocket. So the only level I have remaining to watch is the 786. And then I did the same thing here, but very locally. So I pulled it from the local high to the local low. And right now we're at the golden pocket. So if you're going to see a local lower high, it makes sense that the local lower high comes between the golden pocket and 786. So here, here, if we don't, then I would say that's a very easy target to the monthly open. I would say if you don't see a rejection here, to me, it's pretty clear that you're going for that monthly open then. So that's fibs. And if we, let's just do a zoom out with them open. So the major golden pocket to the downside starts at 94.2. The major golden pocket to the upside starts at 117,000. Liquidity. Okay, we're gonna mark these out now. You probably could put one here. I just don't like to have the lines everywhere, so I'm just gonna leave it at here, but I'm definitely gonna be watching if there's a reaction at that one as well. Okay, naked points of control. Okay, give me 1 sec. I gotta just pull open my software because that's how I grab them here. Let's see if there's anything new. Okay. Nope, there's no new naked daily point of control. We actually just tapped into it. The naked daily was right above us from yesterday. So here's yesterday's price action. The naked daily point of control, which is now not naked because it's naked until it gets tapped, so it's now just a POC, was right here. So we're not marking it out anymore because it's already been hit. But single prints, we can see, I usually use a different software for this as well, but it's very laggy right now. Sorry, I'm just looking if there's an area that there would even be a chance of being a single print, and really the only area I could see is here. So let me check into the software again. It's just been a little slow, but give me a sec here. Okay, so there is actually a single print. Okay, right here. So let's mark it out. It gets filled at 107,949. Look at that. The only place we said that there was a possibility of being a single print, that's where the single print gets filled. Pretty cool. Pretty cool. Okay. So the closest single print to the upside is 114,905, and the closest to the downside is 107,949. Okay, let's look at fair value gaps. So I only do the daily and the 4 hour for fair value gaps. So you got a daily fair value gap. You got this massive daily up here. And if you want to see all my share charts and all of my levels and everything, just join the Discord, guys. Just send me a message. Instead of having to try to memorize all these levels, if you're interested of them on my charts, I can just share all these charts with you guys. keep her easy. Okay, so now we're on 4 hour. We do got a couple. We got a little one right here. Oh, that was just my daily. Okay, 4 hour. Here to here. Everything to the upside has been hit. So you start tapping into the fair value gap to the downside at 109,658, and the fair value gap to the upside has slightly been tapped into, but it starts at 113,721. But that area of it has been filled, so I would say it really doesn't start now until the monthly open, right around 114,000. And again, fair value, actually I don't think I said it this video, I definitely said it in my last few streams, but fair value gaps can act as support or resistance until they start to get filled. And an example would be is if we came back down, just because there's a fair value gap doesn't mean we have to fill it. We could actually sit like that, and later on, when the drop happens, then you start tanking through your fair value gaps, and eventually they work, but you could use them as support and resistance. If you're approaching a fair value gap to the downside and you see bullish signals, there's usually a strong chance that that's probably not going to get filled yet. If you're coming down to the fair value gap and things look bearish, there's a really strong chance that you're just going to fill that. But definitely don't expect that the fair value gaps always get filled immediately. Sometimes they can take, if it's a 4 hour fair value gap, sometimes it can take weeks, sometimes it can take months, right? And just imagine if Bitcoin were to tank and say go below 100,000 for a while, we would have a massive fair value gap between like 116 and 120,000. Now if you were to go start a bear market, you wouldn't come back up to hit those for probably a year, right? Maybe even 2 years. So take fair value gaps with a grain of salt, but they work very well if you know how to use them. Okay, this one is anchored VWAPs. So I've pulled a VWAP from every major low and every major high. So you can see right now, and this is why I love VWAPs, is right now, this whole time we've just been hanging out right at this VWAP from the last macro low. If we lose this VWAP, I would be targeting the next one to the downside, which right now is right around 95,000. To the upside, if we zoom in here a bit, I've pulled a bearish VWAP from the high, and you can see so far it's acted as resistance once, pretty well to the dollar. So if we zoom in here a bit, you can see it's right under the monthly open and a little bit below this wick right now. Now what you can also do is we could, let's just see, we could pull another anchored VWAP from this low. Yeah, let's leave that one on. So if we start to fall, these are your VWAPs you want to watch to the downside. This is the VWAP you want to watch to the upside. Okay. Small order blocks. I don't really use this one too much, but I still like to just mark out where 4 hour, 6 hour order blocks are. So lately I've just been doing 4 hour order blocks. Okay, nothing too important about those. Just gives you more levels to watch. Market structure. So I did a deep dive on my last Bitcoin analysis about kind of how the market structure looks right now. But pretty well what happened up here is we had a swing failure here, and we've had a swing failure here in just a sideways range. So if you were to listen to just swing failures, whenever you swing fail a level, you target the level that created it. So we had a swing failure up here. This level created it. It became the target. Now we have a swing failure here. This created it. So the target is up here. If you were to just listen to swing failures. So as far as there being macro market structure right now, there's not, because you've had a swing failure on both sides. So if we drop down to say a 4 hour, if we were to do a market structure pull from the high to the low here, we come down, we came up, and we came down. You see how this low hasn't been taken? There is no more market structure in this sideways range other than dropping more time frames and going more internal. As far as the 4 hour, the 4 hour changed bearish market structure right here. So you had a 4 hour change of market structure bearish. After change of market structures, you watch for lower highs for continuation to the downside. The problem with the market structure from the top is there is no change of market structure until way up here. So you don't have a 4 hour change of market structure until like 124,000. And there's really nothing we can do with that. So we have to drop down and even just take more do a more internal pull on market structure. So if you were to grab, say, let's see how we can look at this. Even from here. So let's just take it from this low. We came up, we came down, we came up, breaking market structure. When we came down again, what did we do? You can see at the lows here how we've just non-stop wicked them. This is another swing failure, making the high that created it the target. So market structure from this local low looks like this. Came up, came down, came up, came down. For the swing failure, the target is a break of market structure. So if we're just using very internal market structure, the market structure from the high is clearly bearish. But if we were to take this sideways range market structure, it is saying to target a break of market structure up here. And the beauty with market structures, you can keep going. If we drop to, say, a 1 hour, and we want to do a local pull now just from the last low that came in, we came up, we came down, we came up, we came down, up. The last break of market structure is right here, making this your protected low. Until you take out a protected low, you watch for continuations. So right now, until market structure tells us otherwise, we're going for a continuation up here. Now this is just market structure. We're going through them one by one, picking out the bearish and bullish signs from each. And then we combine what we see. We pop up, open all of our levels, take out all the guesswork. We find areas of resistance, areas of support. And then we have our couple different strategies of how to actually enter the trades at those areas of interest. So this is nothing more than just a tool in the tool belt, right? Okay, we were just on VWAPs. Now, small structure. Okay. This is where all of my spot Bitcoin buys are. Now, I don't have them at all these levels, and I'm going to explain it. If you're someone that thinks the bull market is going to continue, that's why I have these light green boxes. To me, if you think the bull market is going to continue, these are great areas to look to accumulate some more Bitcoin. If you think the bull market is over, to me, the first area to target really isn't until like 70,000, 69,000, because you'd be targeting a macro change of market structure. When an actual bear market starts, you're going to start changing weekly, 2 week, maybe even, yeah, maybe, I don't think we can even go up to monthly because we don't really have any structure on it. Let me just check quick. Yeah, we do, but right, if we came up to change weekly market structure in the bear market at any point, right now the change of market structure is down right here. So I wouldn't be making my first spot buy on the change of market structure. I would make it on the high volume node where the market structure changes, kind of targeting something like that. If this were to happen, again, just a scenario, I go through how I would handle the market if something like that were to happen. Okay, divergences. This is the main one right here. This is really the only one that's worth talking about right now, is you have a massive divergence right here. Whenever the bear divs or the bull divs actually start playing out, so a bear div's target is the change of market structure. Whenever the bear div is actually going to play out, you target the change of market structure, which would be the protected low. Okay, which might sound confusing a little bit, but for example, whenever this starts to, once this bear div actually plays out, the target would be the change of market structure. Where's the change of market structure right now? It's all the way down here. So if this plays out at any moment or at any point, you could definitely see something like this, because you just got to imagine like what happens on bull and bear divs on the 1 minute. You see stuff like this all the time, right? So let's zoom in a little bit, see if there's anything locally. On the last stream, we marked this bear div up. I said that there wasn't too much that I really liked about it. It gave you to the change of market structure, but it didn't change it because we only wicked the lows. See how we only wicked it? Making this the target again, which we went over a few minutes ago, talking about the swing failure of the protected low, making the break of market structure the target. Okay. CME gaps. I'm not going to go over and explain those right now, but the only CME gap on the chart right now is at 91,700. So if we're going to go fill another CME gap, it's going to be down at 91.7. Okay, patterns. This is the last one. I'm not too much of a pattern trader, but I still like to mark them out. So I've marked this macro trend line out, but you can see that we've been just hanging out at this level for pretty well 315 days. We came down here, of course, for a while, but right up here you had 60 days. You were here tapping again for 42 days, and then you broke it for a couple weeks, and then we've been testing the level for another 56 days. So very important trend line. And then I have drew a trend line to the downside here. Whenever it happens, right? It could still go take the high. And again, I'm drawing all these out just as scenarios to show that once we see bullish or bearish signals at an area of interest, that's what gives us the best chance. Okay, so how would I set this chart up now that we've marked out a bunch of stuff? I would pull up what's needed. None of that's needed. I don't need that right now. And what you also can do with top-down analysis is, if you don't like your chart looking like this, you can hide every other level other than the closest ones to you. So if I wanted to keep a really clean chart, I could hide everything else other than this Fibonacci pool to the upside and this 4-day order block to the downside, because the 4-day order block is the first target to the downside, and the first area of resistance is the golden pocket 786 where we are right now. So if you wanted to just have two simple lines on the chart, you could easily do that. Up here, we watch for bearish signals. Down here, we watch for bullish signals. So how I do this is I have another screen to the left of me here. So I'm going to put that here. And then this is our scalping chart for my scalping live streams. We'll add in any new levels that are needed, which we have a new 4-day order block. So we'll put that on this chart. Mark out a few things on my scalping chart locally here. We're just going to come up with a really local plan just to give you guys an idea going into tomorrow. Okay, right here, I would say this red box is pretty well make or break, because what you have here is a high volume node of the previous range, the golden pocket, and a supply imbalance. Meaning if you see bearish signs on your strategy, these are the areas where you give yourself the best chance. Now I'm not breaking down to see if it's actually giving me the signal on my strategy. We'll go into that on Bitcoin scalping session tomorrow. But to give yourself the best chance, you wait for price to go to your areas of interest, and you look for a long or a short, depending which where your area of interest is. So for sure here, I would be watching for a short. Not saying it's going to happen. If it doesn't happen, I'm going to target up here. And really, if it doesn't happen, if we don't reject here, I'm not even targeting here. I would be targeting minimum the 786, but probably the naked daily point of control. So let's actually mark these out, and then we can come back to it tomorrow. So let's do this. I'm gonna mark this out. Actually, I'm going to get rid of this one right now. Okay, so for the plan going in tonight, I would say area to watch for rejection is right where we're at, right here. If we break this level, I wouldn't really be watching the 786. I understand that the 786 is also a value area high. You have your value area high and your 786. I just don't really like, I wouldn't target the 786 if this is broken. I would target this 786, this naked daily point of control, and then the monthly open. If we fail to reclaim the red box, my first target would be the demand imbalance golden pocket, it's only a golden pocket as long as this is the high. If you go in and even put the high here, this is no longer the golden pocket, of course, because your fib pool moved. So that would be target 1. Where else? I would say target 2. We're going to do it like this. Halfway mitigation of demand is possible, but I would like to come tap into that weekly 4-day order block. And then after that, I would target all the way down here. So I'll put this in. Oh, I'll say ideas. And this was from our stream yesterday. So when I took the stream, we were right here. So we hit two of the targets, came and rejected from the second target, came back down and hit target 1 of that, and then so far we've just been in between. So you can see I have the 786 and the naked daily that was marked like we did today, and then the 4-day like it's marked today as well. So I can get rid of this, we don't need that. Okay, so those are the ideas. And the main one I would say to watch to the downside here is this anchored VWAP, this green line right here. So on your chart, what I would do is pull an anchored VWAP from the local low. And I would say as long as we can stay above the anchored VWAP, we're good to go. If you start losing these anchored VWAPs of the trend here, I would say that's no good. You're going to start falling, keep falling down. Okay, I think that's it for me. Not as good of a stream today, but I think we provided some insight for you guys.